Hello everybody, welcome back. Let's get looking at some of these charts. We'll start with the S&P because we're heading towards the first major target of this pullback so far. It's not been significantly large, to be honest with you. It's, I know everybody's going to be thinking about crashing and dumping and chaos and stuff, but at the moment, we've had this effectively, it's a bit like a rounded top with this overheated money flow index, two overheated reads really. The second one and the third technical high, I suppose, on a candle body was bearish divergence, but it's so small that it's not really worth talking about, to be honest. So the most important thing is we're looking to see this react positively around this area, $5,655. It's basically a horizontal from the previous two tops. It's a retest of this ascending triangle. It's just in between the 21 exponential and the 20 moving average on the daily. So quite a lot of reason to assume a bounce from here, maybe even continuation. Up, that would be, and that is the truth. The money flow index has not reset at all, but it's down towards 68 now, so and this is just the futures market. You can have a look at S&P or SPX, which did have a similar read. Obviously, we had a quite a hot money flow index read. We had drives of bearish divergence on the daily, and again, we're just looking at the same chart, just slightly different volume, really. Right, so that is that. Let's go on to the meat of the matter, which is Bitcoin still dribbling down. Again, it's also worth recognizing that the S&P futures market is down over 0.5% at the moment, so it's normally an indicator of strength or weakness moving forward, but it might all be over, to be honest with you, as far as that price action is concerned, as we sort of dip down a little bit more before we get the bounce. Now, Bitcoin has double tapped the 200 simple moving average on the 4 hourly, so this is what I would consider to be the do or die. So it's more or less the same situation as yesterday, really. You lose this area, you come down another 4.5% really, and that would be that horizontal 57,600. And there's a lot of stuff going on recently around that area. It's more of a up-to-date horizontal of significance. So if we did lose here, that's where we go down to. Now look, we've been creeping down, and throughout this last period of the downtrend, we do have some bullish divergence on the RSI and also on the money flow index as well. It's only a 4 hourly, but it might be enough to allow for a third drive and then a move back up and then a breakout. So people are still holding on to the Pumptober idea. I don't think they are. I think they're all pretty much that concept's out the window for the people who are touting it. But for me, it looks pretty much like it should do, which is a pullback after a very hot read on the money flow index, also getting quite close to the top of a descending trend, which has been consolidating since March, really, for Bitcoin and for all the other altcoins. And so if you were going to pull back from anywhere, it would have been around this area, between, I suppose, the 200 simple, which is 64,000, and 68,000 at the top of the trend line. Outside of that, though, I don't really see too much reason to be massively concerned off the chart itself. This has been quite close to, and again, it's only a dip down below 60,000, quite close to another tap on that 200 exponential. It's not been the most useful of moving averages, to be fair, on this daily, and the 4 hourly really didn't respect it a great deal either, but it is there. And so if you're going to maintain a bullish perspective, it's going to be around 60,000, to be honest with you, for immediate sort of bullishness. But we know that all markets are correlated. They're all very much tied together, and the S&P still coming down to that area that which could just be a retest of the breakout area, which is basically what it would be. It's a retest of the breakout. So, and then just like any chart really, if you want to get bullish, if you want to get in on this, then this is technically a breakout trade. Revisit this area, bounce up, new all-time highs. We did look at the NASDAQ on the live stream actually, so we'll just reference that again, which is still looking okay. We've actually already come down. Let's just rewind. We've had a breakout, a technical breakout of a symmetrical triangle. Looking to retest these areas. The first areas are going to be between the 21 and the 20, and we saw that reaction there yesterday. We're seeing it again today. And a situation like this is a breakout trade which does measure on to make a new all-time high. That's basically what it looks like. So NASDAQ does appear to be positioned in a way to make a new all-time high. Now, let's not forget about all the stuff that's going on in the world, which are going to influence these charts dramatically, because they are. but the charts on their own merit, or at least for the NASDAQ and the S&P, are doing breakout retests. And if you're going to get a V-shaped recovery on Bitcoin, just as I said yesterday, it's going to take place from these kind of areas. 4 hourly, golden cross retest, okay, V-shape. Daily, golden cross retest, V-shape. So still, to be honest with you, mildly optimistic about how it's going to work out in the short term. But if it doesn't, it's no big deal. It's absolutely more than accounted for. We can go down further, hit this area bounce, so long as we don't really make a new local low, which is all the way down here. And again, even if we did, it would be a buy the dip opportunity, but it would also likely mean there's a good chance that we would break it, because we should have broken out of this consolidation by now. I mean, it's interesting to just, I'll just leave you on this note really. It's interesting to think how this bull market is similar but also quite different to the last bull market. So the last bull market began and had a very quick tear up really. It ripped from around, well, it was a very short period of bull. It went up like 300% in about 4 months, whereas this one did more or less the same kind of gains, but over a year. So it is only fair to consolidate for close to the same amount of time as the uptrend, but you know, let's not beat around the bush here. It's all correlated to the broader markets anyway, so I still think it's going to return to previous all-time highs, maybe even by the end of this month, if not this year into next year. The projection is still the same, but as of the day-to-day, it's more or less a carbon copy of what we said yesterday. Hold on to this area for dear life, 60,000. Lose that, I suppose 57,600 is where we're going to see next. And really, it's all about the weekly close. And if the week can close above at least the 21 exponential, which is around 61,000, we should be looking for, you know, this consolidation to break sooner rather than later. Maybe even, and probably even this month. Right, that will be that. I'll leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.